Um, so I'm recording this again because, yeah, like you know this, yeah, that's it. I had this open, so that's fucking hell. Let me. They gave me just 1 second to make everything how it was because I was talking already about the XY and shit like that. But now going fast because I already talk so much. Uh, this pre-Sunday and doing the recap of this last week. What I'm going to say is about what I mentioned in the before the weekly opening was that we have the bar change and the contract change because bar chart and contract change because the open interest from the ESZ and the ESH24 contract was now different and because the December contract has been closed, so that's why we changed contracts. On the news, I was expecting some kind of not range but slow delivery, I would say. Not expecting a PO3 because there's no high impact news on Tuesday, and possibly expecting Wednesday, Thursday, and Friday to expand to the drone liquidity or to just be some kind of chopping traders that are now outside of the charts, inside of the charts where when they should be outside. So I will show this just for you to try to read if you want. Pause it. Looking for the 2022 high. Same thing here on HS. Here I mentioned that we have this possible order block where you can retrace to before going, but we are so close to drone liquidity it's very unlikely. On that we can see a little bit of consolidation on the Monday and Tuesday because I have less news and because we are above a buy side liquidity pool. Here that's a bad candlestick for me that I was expecting. This is not, I would say not the correct candlestick, but not the correct range. It's a very big candlestick for a week that does not have that high volatility news that we'll be expecting. So I saw that price could trade low into the VI, into a discount of the previous week, which it was wrong, but it is what it is. I was making this late on the day, so that's why. This is me mentioning that everyone is trying to chase price and looking at the fair value gap, so ICT dumb money is trying to retrace and buy this, which is not going to happen after Tron Liquid Potato. So actually the candlestick for this week was going to be a open, high, low and close. That would make more sense, but I will see because I didn't see the candlestick. But everyone is trying to look at this fair value gap, trying to buy it, like me, like I was expecting the price to retrace into the weekly discount. But that does not happen because one, we are close to the raw liquidity, and two, the implied daily range, where we are now very close to the target, so there's no need for price to retrace, and price only retrace at discounts or at equilibrium. So that's it. Once it reaches above like equilibrium, there's a short-term consolidation, usually turtle soup, and then a continuation, like you can see here. This is a SMT right here. So that's it. The XY traded into the rejection block. This is the yearly candlestick. Created this inside candlestick, so it's going to be pretty fun doing the yearly recap and then the 2024 foreshadow. This is me looking at these eyes equalize at the end of the year after trading into this monthly, weekly, and daily range discount arrays, especially inside OTE. This means that on daily I would like to see price trade inside of this daily range from the previous week towards this candlestick. Yes, this is me mentioning that we have this big candlestick on downside, where price then on Friday consolidate inside of it, or to this range, and now we are here ranging. If we trade higher to the CB, then lower, then you could possibly see the real reversal. But if you trade lower, higher, then you can possibly see lower. So it depends on what each side gets taken first and what happens on the second side. If the second side, if let's mention that you take range low, then you take range high. What happens here? Do you see consolidation? Do you see expansion and consolidation to continue? So that's all narrative that have to be thought about and understand, and that's in your head before trying to trade ranges. So that's all of it. Let's not forget to close this. Yes, let's go. So now I can show you the charts and move like I was moving previously, but I have to end the recording because it was shit. So starting with the XY, because why not? Yearly range, yearly low, yearly high. Price reached lower into the discount week, so into the rejection block we take all of this liquidity because there are a lot of stop losses at these bodies. Like, look at this. And this was followed by price as well on the weekly candlestick. On the weekly candlestick we have the inversion, the as well as the rejection. Not these ones. Oh, they did not show. Yeah, as well as the other one. So that's it. And we have this equalizer right here. So a possible reversal after taking this previous week low is very possible, but there's no need to try to trade. So this past week on the XY, we had the monthly open and we had the weekly open. So the monthly open shows me that we have price open traded higher above this high, reached into this original consolidation, not able to take it. So this intermediate low was being respected. This Thursday 16/11/2023 high was respected. So we have this retracement, turtle soup, and then expansion with energy lower into the drawn liquidity. So this was now followed up with this where everyone is thinking that it is a market structure shift, so everyone expected and wants to see that happening. I am not looking at that. I'm looking at price trading to a lot of high time frame PD arrays, so this market structure shift is going to be market structure shit. Okay, that's a good thing. So this market structure shift is now going to be not ignored but violated in some case because the high time frame key levels are more important than the low time frame market structure shift. This week you can see that there was like no reversal. We just have Monday opening, creating like equalize right here, not able to trade into this EV, and just continue on downside, taking range low. So I will not be interested in buying into the range high. Why would I be expecting this to be the low, to buy this low, expecting this low to be respected? Because it's a turtle soup right here, range low taken, high time frame key levels, discount arrays, whatever you want to call it, equalize, CB open, so external internal, as well as time. So if I go into the month, so let's put into the 4 hour and put this right here like I was doing on the last recording. Yes sir. And now I can divide this. Fuck, not here again. December. So like I'm mentioning on the previous recording, there are only 2 reversals on the week. And reversals I mean changes in the state of delivery. Why 2? Because there's always need to be an open, an I, and then this I makes the low and makes the close. What do you mean by 2 changes on state of delivery? Pretty simple. Pretty simple. Let's just make an example here with a candlestick so it can be better understand. So what are wicks and how does wicks work? There's a reason why City say that you have to buy the wicks or sell the wicks, or you have to be looking at the consequent encroachment of the wicks and things like that. Because a wick is a change in the state of delivery. It can be a low time frame, it can be a short term, meaning that short term price will trade higher to close, or it can be an item frame change of an item frame, not time frame, but a long term change state of delivery. Meaning that in this case we open, like we open here in the month, and we have bullish momentum, which continues from this low close of this previous month. So we have the low close previous month. So on this close, we have this change of state of delivery. To make a low, you first need bearishness. To make an high, you first need bullishness. So that's why for me trading reversals, it's not hard, but it's hard to understand and hard to explain. Maybe I'm not good, and that's just the reason. And I think that's it because I only have like 1 year and 2 months of experience on the markets. Studying, not trading. Trading, I started trading October, and it is what it is. It's better I can say. It's going better in the future. But what I mean by that is that the same thing happened here. So you have an open on whatever was November, and I expansion low to make this low. And to make a low, what do you need? So inside of these wicks, just push it a little bit. Inside of these wicks, there is like a market maker, not a market maker, but there's always a bread and butter model, if you want to say, or there is always a reversal going to happen, because for the wick to be made, for this eye to unload to be made, there needs to be a reversal. There needs to be a change on state of delivery, something. So let's just say, for example, that it was like this, make the eye, expansion, OT, and so on. Imagine that this was to make the eye. Well, this is what happens inside of a week. Look at this. So you know that this is the close of November. Bro, I hate this thing so much. So you know that this was the opening of December, close of November. So if this was the close, all of this was the discount week of November. And what you can see inside of the discount week, price trending lower, change on the state of delivery to make it low, expansion, retracement, and then this short-term trade into where this intermittent high. So there's always trades to be cut, there are always models and things to work. And same thing on downside, not only here, but if you let me see if I can reverse it, or there's not, yeah, that's not possible. And same thing happens here, my price for it makes lower, so whatever. So this not fucking close. Yeah, that's perfect. So something like here as well. And then the body is just the explosive movement into the normal liquidity. I'll give you 1 second. So Closing this. And now go into this. The funny thing about this is, so making the rest really fast. Let's imagine that this is the let's make that this is November. Okay, so this was the open and the close for November, and then this is the close, right? For November. What happens? So usually that's not that big of an opening gap or of opening gap. So this the closing of the candlestick is also to opening, so this can expand. So November close, opening of December. What can I see? That first we had price trade higher. Let's make this better explained to be. Okay. Imagine that this is the candlestick, whatever. What we have opening. First we have a false bottom and then a expansion higher, making an high, and then we go back lower, 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 and make this low, creating this candlestick like this. So first we have this open, high, turtle soup, key level, everything. Then we have the continuation lower, 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 false low, first touch at the key level, false low, big candlestick with followed by inside candlestick showing accumulation. So this is a range high, range low. At this range low, what we have? Same thing. So if you're looking at the bar candlestick, it will be this that you're seeing. It was the open price like a little bit lower on that first time, higher. Just look at the left and follow my gray cursor thing, like these gray lines right here, dashed lines. Then to here, a little bit lower, a little bit higher, accumulation, higher, lower, below the opening price of December, higher, lower, make the high, and now we need to make the low. So let me just, so the premium week is now done, and now there's only the downside for it. So now I can't do the same thing, because if I do now, that's going to go, that's going, the that doesn't look like that. So the trend line, so it goes lower, it goes higher, and then it goes lower, 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 consolidation a little bit, and then lower, 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 make this low, then a little bit of a consolidation, retracement, consolidation at the order block, displacement, retracement, consolidation, displacement on downside, boom, this low. And what I expect now, this low to be held and not to make cuts. And now for price to trade higher, 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 and possibly close right here. So after this low being made, all I'm expecting is, so not something like that, but you know, for the discount week to be made, and this would be the December candlestick. So for this now to be made, there all needs to be bullishness, like it was here. This low was made, and then there was bullishness for it to close, and the same thing I will be expecting for for the XY, sorry. Some bullishness on the upside, and at least until I could say this high, but we have this busy CB open, so this is a nice, not short-term trade I would say, but neither scalp. Maybe a short-term trade, day trade possible. These eyes, and obviously the CB spot. The CB is possible if possible, if not just the range eye. So that's something that's unrelated, but that's how basically candlesticks works. And there's a lot of information inside the candlestick, and they always do that, no matter the time frame. Another, not data set, but nuance about this that Romeo explained, and I did not understand. Just after some study, I now understand is that you can. The easy way to catch these reversals is literally you just need to do one thing, which is put a line on the half of the month, and can you see one half makes the high, one half the second half makes the low. So if you're expecting an open high, low, close candlestick, expect the first the first half of the candlestick to make the high, and the second half to make the low. If you're expecting a bullish candlestick, expect the first to make the low and second half to make the high. This works on the yearly. If you study the 22 and 2023 candlestick on ES, it did that very very, and you can see it. If a daily candlestick, same thing. So if you're expecting on daily bullish candlestick, expect the first 12 hours to make the low, and expect the last 12 hours to make the high. So divide that on 2. The same thing on the weekly. So expect the first 2.5 days to make the low, right? Tuesday low of the week. And expect the last 2.5 days to make the high of the week, if you're expecting open, high, low, close weekly profile for that candlestick. So I'm not going to talk more about the XY, but this is a very important study. So here on ES, and I'm using the ES one because it has more data about 2022 high, and because I mentioned it, let's just mention to you. So look at the 2023 candlestick, right? Now let's just go in the 6 month. What can I say? 6 month. The first 6 months make the low, and second half of the yearly making the high. So this is how we could be expecting price to continue on the upside. So price traded into the 2022 high to the high time frame liquidity, and now you do nothing. At an very high time frame, very high, a very important key level high time frame pool has been traded to, so price not likely to shop. With that, I can see that my idea was completely wrong. With a very small candlestick on the upside, very small delivery, and that idea of opening and trading here, it was just a bad foreshadowing by my part, but that is just a study of, it's just something to be disciplined, to have like, not a game plan, but to have like an idea of what's going to happen, so then you can engage based on it, instead of going to the week with no idea, no narrative, nothing. So now let's just put a little line here. So there's half, because like there's no need to try to buy these candlesticks right now. If you want to buy, you could buy here, and very possibly here at is equals failure swing in this case. So inside of the week, what can I see? So this was the Monday, and the fair value gap was indeed traded to, but not like you would like to see. Everyone was liking to see what price to trade lower and then higher, giving them the retracement expansion, but the price does not work like that, especially when it's close to the liquidity, and especially when when you're at the premium part of the implied daily range from this low to that there. So I do not talk much more because this week is what it is what it is now, right? Monday expand, Tuesday continue the expansion of Monday. The round continue 32, make this high. Wednesday we have this reversal with this with Wednesday making all of the weekly candlestick, so all of the candlestick range. So from high to low of the week, you simply will need to trade Wednesday because it was Wednesday that make the high and Wednesday that make the low. So now going inside of this, then we have the Tuesday inside candle and Friday inside candle, so this can be now viewed as a range. And the range is usually not a measure of consolidation, but showing that price will consolidate. So what I can see right here is that this for me, the first thing that I look is that this for me looks like a fake market structure shift. I think that price will continue higher because this is just a fake market structure shift. Everyone is looking at this as displacement, but yes, it's a displacement into a night time frame key level, where then you have the reversal and then you continue. So next week, I really think that higher prices are likely on the start of the week into this high. But I'm just throwing ideas. I'm not trading. I'm not watching the charts. Instead, I'm watching the charts and studying past data. That's what I'm doing. But you have weekly open. We have Monday expansion into the previous week high, broken above it. So this high was broken, sorry, and closed above. We have this busy fair value gap. This is a breaker, and then continuation upside. We have then this turtle soup, and then this expansion lower, making the high of the week. And expansion lower into the fair value gap, making the low of the week. And then we had this short-term bullish net retracement, which I think that's going to continue going on the next week. So I will be now doing a lot more on the other chart because there's not that much to talk about, I think, in my idea. We just said the first half of the week making retail want to chase buys, so where that is not a breaker, that's like a breaker in retest for retail, but it can be used as a breaker, and you could use it because it formed when breaking and closing above it formed the fair value gap. So yes, you could use that as a buy. But yeah, you can see that low, close, bullish momentum, continuation with this trend line liquidity. So imagine that you were trying to catch an eye. Okay, this is high, stop out. 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 So that's why you have to pick your shots very carefully, and why you have to be aware that even though that's enticing, trying to catch like the high of the year and then short it lower, or try to catch like a 6-month high and ride all the 6-month candlestick down or 6-month low and ride it all up, you have to be careful enough to have or either a big stop loss or in this case, because there is no left chart, because on the left there's nothing, because it's a new all-time high for ES, so there's no need to try to catch and try to trade before you have the indications or you are proven that indeed that's going to happen. With that, I think that's all for today. I think that actually the biggest gem of this was the XY, but I will now just go into the ESHZ. If you have some kind of note right here, no, not definitely. It's not worth it trying to catch a move right here. Like, how much did this week move? Let me just see. Just on, if if you see that like one single candlestick makes the entire weekly range, that's a good indication not to trade it. Because if you don't catch 87 points is not bad actually, but that's not the amount of points, it's the type of freak that you're trying to trade. Now I have to close this fast. So what? Oh my god, I'm such NQ1. So NQ same thing, expansion, small candlestick. Monday, Tuesday, Wednesday, entire range as well. Friday, fuck, Thursday, retracement, Friday, range. Trade this order block. We have this fair value gaps on downside, so unironically price is likely to trade lower. Try to fill those later on the future. Possibly in last week, trying to close the candlestick of the year. So imagine that this is the high. We have all of the yearly candlestick on those, right? Then we'll possibly close this as the yearly candlestick. For our same thing, we have a lot of retail stops right here, so price will sooner or later make some movement. So that's the difference. If you're trying to trade low time frame turtle soups and reversals, you can many times go like buy this high, right? You could buy you could sell this, sell the buy stops with a stop loss, But the problem on the high time frames is that there's no guarantee, right? That is the complete top or complete top. Whereas on low time frames, you have sometimes to the left, you have here an intermittent MI showing you that it's likely to be respected, or you have some market structure. Here, because you don't have market structure, you need to be aware and not try to catch tops and bottoms on the high time frames. Like, don't try to catch a 1 year or 6 month or quarterly low. I think the best is try to catch 1 month or weekly or daily lows or 4 hour lows or highs or reversals. That's what's it, that's what that is what works for me. But just giving my opinion. So it is what it is. Same thing here. Monday opening. Order block at 2. Expansion closing above it. Did not reach IFD. Continuation, like, even if you traded this, what will be your draw on liquidity? Like, one SD, 2, 1. It could be, it could be. It actually could be. The eyes is a 1 to 3. So yes, you can always trade this. It's fine, but I think that's not in the business that I'm in, and I'd like to trade this. I already had so much fun with the low time frame shit that now fun, like not fun but fun, if you know what I'm saying. But now I'm just trying to get more, not on the high time frames, but get more precise. Have more precise model, precise way of thinking, and precise way of looking at charts. Not trying to gamble on low time frames with no idea. So EM same thing, just expanded and making a new all-time high as well. So the, the whole idea from this video is do not try to catch all-time highs or all-time lows. Like on BTC, like try to catch the 69k high or whatever it is. Like don't try to short everything. If you see a microstrategy shift, don't try to like short it immediately. Like here, microstrategy shift order block, short it. I'm looking at this low too hard. It could happen. I'm not saying that it can't. It can't possibly go lower. And it's likely to do so. Or even lower, lower and more lower. But if you try to catch this, just wait for an SMT to show. And there's no SMT until now. Between these eyes, between these eyes, and between that. So same thing happened in every single indice. Same thing happened. There's no SMT, nothing. So just be a little bit more careful. Don't try to catch the all-time highs. Don't even try to trade. And that's it. Same thing here. Monday consolidation. Tuesday expansion. Wednesday reversal. High to low. Weekly high, weekly low. Wednesday high, Wednesday low. Thursday and then Friday. So I think that DXY was really the best part of this study because it was showing me something that I'm more familiar with, not all of this nonsense sometimes. So I think that's it for this week. I couldn't talk that much about it because I'm not that dialed in the charts. I'm now preparing to go into next year with discipline, with purpose, and with focus. So I'm doing other things related to entrepreneurship out of the charts. So that's all. I want to make this a little smaller, and that's it.